Hello friends, this is Martin from Secrets, which are founded about trading and investing. Welcome to Markets. Next week, the weekly stock market analysis show where we look at what happened in the market during the week and learn something from it and plan for a better week trading. So let's do the analysis, and this is for the week that's beginning from December 19th, Monday 2022. The last 2 weeks more left for the calendar year to end. And let's look at the charts. This is the weekly charts that you're seeing, the weekly of Nifty and weekly of Banknifty. Right. So clearly, it's a pullback. Right. Previous week also we had a bearish, wide range bearish candle, and this week it attempted to move up and then finally ended far away from the close of the previous week, and it's an inverted hammer on the top of a trend. Normally, there is a possibility that there is reversal that can happen from there. Reversal in the sense we can move further down is what is indicative of because of the selling pressure that the wick of the candle is telling us. Back to look at this, it's also an inverted hammer with the wick size showing the selling pressure from the top, but this is for the first trend after 5 or 6 weeks of continuous up move. Right, we have 5 weeks that is continuously making higher high with green candles only, and remember this is the first week and that is turning red after so many weeks, and at the same time it has made a new fresh all-time high also in the same week. Banknifty had gained it up last week itself, and it started the retracement, and then now it is at a support zone. So since it is a support zone, there is this change in polarity bounce where the previous resistance could act as a support, and the bounce up from here can happen. There is a possibility that we cannot roll out, right? So it's at a major support zone in the price action. While Bank Nifty, since it's an inverted hammer at the top, there is a possibility that it can reverse for the downside, because the fact that inverted hammers on the top of a trend, there is a likelihood, but it's confirmed if the price is moving below this week's candle low. Right. Same here also, the Nifty also, the weekly candle hammer would turn out to be more bearish if that support is broken and then price moves below the previous candle's low. So it's only on confirmation that we get to know, but that's something to keep. But having said that, let's quickly look at the weekly view, another weekly view. Remember, Nifty and Bank Nifty, we had broken out since several weeks from that resistance zone where we had spent a lot of time trying to take out that, and finally took it out, right, 5 or 6 weeks back, and then since last 2 weeks we have read in the Nifty, and it's first week that we have read in the Bank Nifty. Right. So it's, if you look at the weekly charts, it's pretty much still a small retracement from the breakout. Right, after a long breakout, this is not what we expect can go further up from here. So it's just a retracement is what it looks like from a medium term charts. Coming back, let's look at the daily charts. So daily chart is also a hammer on the Nifty, and a very small body, more like a gravestone doji, almost like a gravestone, but not exactly gravestone. So it's small. Any small body is, whether it's doji or any other kinds. Small body means it's indecisive. There is a big fight between the bulls and the bears that happen. So this is indecisive, and this is clearly inverted hammer on the daily also. So make a note of another pattern that you can see on Wednesday. So Wednesday, it had created a candlestick pattern known as evening star, where you have a green up move candle, then a red doji small body on the top after a gap up, and then there's an exhaustion, and then big bearish downfall on the next day after Thursday, and then further continuation of that. So this clear example of that evening star pattern that can be seen in the Bank Nifty also, and that also had fallen down substantially after that. So that is how how powerful the candlestick patterns could be, right? So this is a perfect example for an evening star candlestick pattern that is appearing on the both, but bearishness is evident on both the charts, and it is substantially a good amount of correction has happened on the Nifty, but lesser, because the close of this week for the Bank Nifty was flat, and it is at the support. The change in polarity is possible here on a daily basis, daily charts. For the Nifty, the change in priority possibilities there on a weekly basis also, but weekly it is not there in Banknifty, but Banknifty in daily you can see a change in priority bounce possibility. So it's in a major support on both indices. That's what we can say. But the correction of has happened well on the Nifty, and small correction only taken in the Banknifty. That's what we can see from the daily charts. Now, what are the Bollinger Bands? Let's give the numbers what we lost. 231 points is what we lost last week. Now, that's 1.2%, 25%, right? So, in order hammer, it's still closed above the 20 weekly moving average. It is closed above the 20 weekly moving, not daily. And it is closed less than the previous candle low. That means more bearish. Right? And the index is having a trend and resistance. We have seen that already. It had broken out and all that. Right? First two well-talk hypers happened 2 weeks before. Right? And Nifty had a change in polarity. We have seen that. Right? So that's about. It's pretty much so. That's pretty much greater than 3%. Last just 2 weeks, 3% of correction has happened. So that's what Nifty is all about. Bank Nifty, look at this. It is closed flat. There's 51 points lost in a week. Nothing has happened. Still at a support zone in the daily. So it's closed above the 20 moving average, unlike Nifty, which is Nifty also has closed above the 20 week moving average. Yeah, Nifty also has done that, and it is closed. And it is closed greater than the previous candle low. Here it is less than the previous candle's low in the case of Nifty. But so Bank Nifty has more strength still, and not much of a correction has come in. It's at a support on the daily. And also this is the first weekly candle where it is showing bearishness. Still last week it was all green, and even this week it was an all-time high and then an inverted hammer. So Bank Nifty is still powerful. It's all strength is there in the sense. Coming to the lower time frame daily, that means that last Friday's price action was after the expiry big fall. Friday was another continuation of that fall that happened, like 146 points lost on the Nifty, forming an inverted hammer, and then 279 points lost, little more than 0.5% is lost on the Bank Nifty. So indecisive candle is there on the Bank Nifty, almost like a gravestone, but not exactly. So we have seen all these things. Now let's get to the what Bollinger Bands is saying. So daily Nifty, the Bollinger Bands have lost the bullish bias and it is in the bearish bias. And this consolidation where the bands are moving sideways. So sideways consolidation we can see. How about Bank Nifty? Bank Nifty has taken a support, but it has breached that moving sub. So it's bearish bias only, but consolidation, the bend has happened, and then it's going to be consolidation for some time is what the contraction of the Bollinger Bands in the Bank Nifty is showing. So both have not turned into sideways as per the Bollinger Bands. So consolidation, what we can expect is what Bollinger Bands say. We had seen this breaking out scenario that has happened, right? Let's look at the support resistance levels. 18269 seems to be where we have close, right? So 262 has got a good support on the Nifty. That's the first support, and after that 18100 is a very good support with the previous swing low. And also a gap support is sometimes powerful. 18,000 is going to be a swing low. 17966 together, that zone, it's going to be another support if in case 18100 is breached. If that also is breached, 7950 also breaches, then you have a 17850 nearby zone. It's also a gap. 17830, 839 is a gap support. So powerful support is downside, and it is support right now. The resistance first would be 18450 to the 18400 levels which it had reached earlier, then 18530 resistance, then 18678 resistance, then 18778 resistance, and then 18888 resistance, and then rounding number of 19,000 ultimately. So that's how the support resistance is on the Nifty looks like. Bank Nifty slipped off the support zone. That is 43,39 is gone history. So down support would be 32,900 zone near to 43,000, and then after that you have 42,740 levels, and then 42,622 levels, which is the previous swing low, as well as if it naturally 38 extension levels from the break. So that's how it is, right? And upside you have 43,767, 43,983, and 44,151, and then 44,500 zone. So that's how the resistance upside for the bank looks like. We can also clearly see that there is it's at a support zone, Nifty as well as Bank Nifty on the daily time frames. You can very clearly see that this is a major support zone that we have, that both indices are. Nifty especially, Bank Nifty could fall some more to the 43,000 levels and that take support there also. But one thing that you can see is the wedging, the ascending wedging wedge is what we are talking about. We just breached in form of that. Right? That means consolidation. So that it is the end, that big up move that is happening for several weeks after the breakout from the resistance has come to a halt. It's very indicative from here, from that wedge. There's a trend line, ascending wedge that is seen here in this support resistance charts, right? Just for reference. That's it about the price actions. Let's move on and see the indicators. What are the momentum? The price, we have studied the price. Now it is momentum of the price. Momentum of the price is measured with RSI. Trend indicator is ADX. That's what it is. So what do they say? So we can clearly see that it is right. So what you see is Nifty on the left side, Bank Nifty on no. Nifty on the top and Bank Nifty on the bottom, right? So left side you have the weekly, right side you have it. So Nifty, let's see them. So it's kind of bullish still on the weekly charts, although it has slightly breached that. And Bank Nifty weekly, it's still bullish. Right. So here it has slipped, but it's on the edge, 59 something. So although the momentum has slipped on a week-to-week basis, you can see it's on the edge. So it's almost kind of bullish still. So weekly, the momentum has not dipped below the RSI 60. But look at the daily charts. Nifty and Bank Nifty, both of them have slipped into the bearish zones. Bank Nifty was well above the RSI 60 last week, and there, but that also has slightly dipped. And if you don't consider that 59 thing, then you could find a positive reverse divergence, which is bullish in nature, and the bounce can happen from here. That's possibilities there in Bank Nifty from the momentum perspective, right? RSI. So that's it. Short-term momentum has slipped into sideways, and medium-term momentum is still almost flat on both the indices. How about trend? Trend indicator is the ADX. What you see downside here. ADX is still bullish on medium term. On weekly charts, both indices of bullishness still there in the ADX, and it is rising. It is a bullishness with this trend strength indicated by the green line that you see in the middle on the ADX. Right, so that's what you see here. And going ahead, yes. So the trend indicator, that's the ADX, is turned to bearishness in the Nifty and the Bank Nifty. In the short term daily charts. So daily the trend has changed, but weekly, just like the momentum, the trend indicator ADX also is more or less intact. Right, the crossover to the bearishness has not yet happened in the weekly time frame, is what it indicates. Right, that's what momentum in the trend. So short term we have something to worry, but not yet in the long term. In a nutshell. Now last week VIX has spiked up 4% above. Right? Still it's closed at 14 VIX. Is okay. You have to be cautious, right? And let's just see the support zone of the VIX, India VIX. That 13 point, that zone is a very good support, previous support. That is where it bounced up. That's just, so if it falls down further, then it can take support 11.7, that zone. Now it is exactly taken. Now it may face resistance. So just for reference, that VIX has been reverting nature. It has been reverted from a support. Last week it spiked up, but still not bad. It's low VIX only. The regime is still that of low VIX. That's the India VIX, the volatility. Right. Now moving ahead, the open interest data analysis, if you see last week, the build was long unwinding on the Nifty as well as on the Bank Nifty. So that what does it unwinding mean? So it's like, oh no, I was bull. No, I'm unwinding my positions to take a short. Right? So it's bearish basically. The futures high is what it is indicating this long unwinding. So that's a price action. So it has built up, and on the options of expiry, the put call ratio is closer to the bearishness. You can see 0.61 and 0.55. For the Nifty and the Bank Nifty, put call ratio is closer to bearishness than the bullishness. So that is also, so open interest in short is bearish. And for the December 22 weekly expiry, look at these levels. Right, so levels suddenly, as compared to the previous week, we can see that the highest put rating is at 18,000 suddenly, yeah. And next highest put rating is seen at 70,500. So That's a wide range. The option writers are saying that there could be bigger fluctuations from here because the VIX has spiked up. 18,600 where the highest call writing is seen, and then after that 18,400. So it's not expecting it to close higher than the 18,600 at this point, for the next expiry at least. And it's hoping that it won't fall below the 17,500. That's quite a big fall if it is going to that range, but that's a range. So it's bearishness is evident here also. Brokerage we have seen, futures we built up we have seen, and Banknifty, what are the levels? So it's a 1,000 point, 43,000 highest put writing, 44,000 highest call writing, and 41,000 and 43,500 is where the next highest put and call writing after that. So it's a wider range that is coming now as compared to the previous week, and the bearishness is the wider range is being taken by the option writers basically. That's what I see. Moving ahead, let's study the industrial sectors. Industrial sectors, all of the sectors, it's down. IT sector 1.6% down, metal less than 0.5% down, auto sector 0.7% down, 1% performer down, 1.85% FMCG down, realty 1.7% down. Across the sector downfall is what I. But most of them. So only sector that was bullish, mostly bullish was metal and FMCG. Metal has slipped with closed with the industry, then slipped into sideways momentum. Although the weekly is bullish, so that also cannot take long positions. FMCG also slipped in sideways momentum with the bullish weekly momentum, but yeah, so we'll have to wait there also. But overall, it's all sideways. In the medium term, all are sideways mostly in the medium term. Although metal and FMCG still holds bullishness on the medium term. So short term, there is a big fall that has happened across. That's very indicative. None of the sectors are safe to go for long positions. Neither short positions because it's sideways. Let's study this one. IT was it met with a heavy resistance, but the Nasdaq fall, it also fall. Right? This is a major resistance zone, but it has worse from, we can clearly see. Metal, you can see that it's just been consolidating, and it is an inverted hammer, inverted head and shoulder, bullish momentum, everything is there, but it closed intensive after hitting a major resistance zone. It is at resistance very clearly, although momentum is bullish. And IT has already, it was at resistance and already pulled back. Previous week itself with wide range bearish candle. Auto, what exactly happened? At resistance of the momentum, and price action has been down for the last 3, 4, 5, 6, 7 weeks from the top resistance zone. But it is having more strength as compared to many other sectors. Pharma, bearish. Remember, it had broken out from the parallel channel, and now it is taking support of the parallel channel after facing with a major resistance that is marked here in a different color. Right? So momentum is slipping sideways. Pharma and then bearish. FMCG was a strong sector, and first time you see a wide range bearish candle after 3 weeks of up. Right? Momentum is still bullish on the medium term. So one of the strong stocks along with the metal. Looks like it is in a channel, so it may fall some more and take support and then move further up. Right? So trend momentum is intact. The FMCG, although pullback has happened. Near reality also is consolidating, has been doing that. It is having a resistance up there, and it has hit there multiple times. You can see the momentum resisting below the RSI 60 and falling. So that's what the charts are saying for the industrial sectors. Right? In a nutshell, it's wait and watch time for sectorial picks on the top-down approach. Now, moving ahead, let's analyze the industrial heavyweights. What constitutes the Nifty 50? The major heavyweights, the critic stocks, what they call, the HDFCs, the Reliances, the Infitisias, and then ICICI Bank or Bank. So that contributes the highest constituent of the index. HDFC Bank was breaking out of that flat pattern, but fell in the resistance, but still managed to close green. Momentum is bullish, everything is bullish on the medium term and short term. Now what is there? Except that we'll have to wait and watch if it is able to really break out, but it does got a 1726 resistance up there. 17800 or 1726, that zone is a resistance. It's a clearly. It's a bear zone still unless it closes above that. Right, a moment was good. So same case with HDFC also. It's a flag pattern. Consolidation is happening now. Very likelihood that this flag pattern breaks out upside, but there is resistance at 2900. Moment is otherwise bullish and trend is bullish. Everything is bullish on the medium term. Reliance Industries has been consolidating in this range. It's sideways right now, met with the resistance when we try to move up. So we'll have to keep a watch of this to 2800 levels if it is breaking out or not. And this neckline of this couple if it is going down or not. But as of now, looks like it is making another journey downside towards the neckline, towards the 2500 levels. Outer sideways as I said, and also sideways on the medium term. So HDFC looks much better than the clients. Infi and TCS, two stocks, IT stocks, met with resistance, just like the index was doing that. Major gap resistance is that is taken out. Forget about getting bullish on this again. TCS also had broken out from the channel and it is met with this narrow size 60 resistance and then wide range bearish candles followed by a kind of gravestone doji in this and it is at a support. It is deciding whether it does fall further down to the next rounds back onto the channel or not from where it breaking out. Look at ICICI Bank, it's a momentum support and there is a weekly chance is having a possible positive reverse divergence which is bullish in nature. That means it could take a support here and bounce up. So this level is a good buying point. If that breaches, then next level would be the neckline zone, further a little more down at 860, 850. That zones could also give opportunities for buying. There's a couple handle breakout. Here broken out with a handle part and then consolidating. Still intact, everything is fine. So we'll have to watch out if the radix is going to cross over or not. That's what now looks bullish and at support. The other ones are all at resistance and reversing is at support. Kotak Mahindra Bank is sideways and it has been zigzagging and it's doing exactly the same. It went to 2000 EMA levels and then falling down towards the 1600 levels and then again more. That's what is happening. So these two ranges are not broken, then we can only play buy at the bottom and sell at the top. That's what we have to say. So for a breakout trade, it has to take out the 2254 levels, where the previous all-time high resistance levels are there. Sideways, Kotak Bank. Is the bank bullish? It is stocks at resistance. HDFC bullish. Reliance consolidating. Let's move ahead and see what the institutional data. Fyers was selling nearly 2000 crores last week. Now 990 crores selling. Fyers had turned sellers last week. As for buying, it's opposite is what they normally do. They were buying to those 3,460 crores in the cash market. That's what held the market up. But it is also net longs moved down for the FIT institutional participation. So if a selling mode is very literally, recession fears are coming in the US. So but the selling is not that big. Remember last week we had one of the highest buying by the FIs. That's nearly 10,000 crores of buy happened just 1 week. That's kind of buying that happened, and 1,900, 2,000 crores selling is not a big deal. It's not heavy selling. There's still hope, but last week was not good. Obviously, the market is down. If I might have sold, so that's exactly what happened. Moving ahead, looking at the global commodities and global markets, let's look at the currency and dollar index is moved flat. Last week, nothing much happened, but remember it had. It is at RSI 60, the price action support after breaching of the trend line and just consolidating. And it's a neckline of a breakout zone, so it means we cannot go further down from here and it's likely to consolidate here or move up. But move up means it's not, you remember 120 kind of levels is multi-decade high level from where it had retraced nearly 11% and then consolidating. That's what's happening, right? But last week was flat. Right? But some pullback has helped. But not for the USD INR currency where the rupee is still weak even the dollar has retraced 11%. Rupee still struggles and it's about 82.70 with a small correction of just 3.5% came and 3% of that is already spiked up in last week. We had a spike up of nearly 0.3% up. Rupee is still at the weakest ever levels, so that's a concern. Now US indices, US markets, we analyzed Dow Jones, Nasdaq and S&P 500. Dow Jones, we can see that it's 2%, 1.7% down. S&P 500 2% down, Nasdaq 0.7% down, sideways momentum for all. So it's at a resistance and reversing from, this is what it indicates. So Dow Jones is at a descending wedge pattern, met with the resistance. We thought it will break out when the news of the Fed came. It actually broke out and then fell into selling pressure and then came at the support and then went further down. Looks like it may be heading further down towards support zones. So that's something that we have watched. So if this kind of big moves happen on the weekly basis, there's no way we can go up. If it is happening slowly or is consolidating, it's fine. But looks like the price pattern on the weekly basis, it maybe big falls that maybe can get settled because it has met with the resistance and it's falling down. Crossover of the trend has not happened yet. If that also happens, then it's confirmed. So we can watch the ATX indicator if that is crossing over to the red or bear zone. So day might negative. If that is happening, then it's 100% definite. Even now it's 100% definite that it could retrace more towards the support zone at least before it can take out and make another up. It has to come down further, first towards the 31.5, then 36, 600 the zone and all this. Same, look at this. It's Nasdaq. Our right structure depend on this, and then here also the same story. The descending wedge, price fell in the selling pressure, the resistance zone, and then it fall down, and it can now fall further down and consolidate there. Right, that's for sure. S&P 500 the same story. Descending wedge, it met with the resistance, selling pressure. So all are having inverted hammers last week on the US axis. So clear valuations seen there. We have to be cautious and hoping for our market to be even more resilient further. Maybe a tough job. Maximum it can do is consolidate. Right? Moving at crude oil has been falling. The only good thing that was happening, but last week it was a spike up of near to 75 once again. So crude oil had spiked up 4.4% after a very good correction. It's happened at 74.55 now. Right? But momentum is still bearish. That's the only thing. As long as it does not climb back to the 90 plus 100 plus zones, it should be okay for our markets. That's falling is only good thing, but rupee is still weak. Moving on, gold is flat in this doji, it's consolidating. Retro resistance that are trying to hang on there. This is gold here on the right side of the charts. You can see it's a couple handle breakout since long. It has been sideways since long. We even went to the bearish ones. Every time it meets the channel top, channel bottom, it climbs up. That's what's happening. Now it has taken one resistance. It has one more to go, but it's very slow trying to hold on that resistance which it conquered earlier. But momentum is sideways and below the RSI 60. It's not bullish, but it has done a good recovery of a good percentage from the bottom swing low. That's gold. That's what gold is. Global commodities, right? It's about currency and the oil drop, right? Our currency is not strengthening, still weak, but crude has fallen although there is spike last week. Overall, it has corrected a lot, so it's only good thing. Two examples bearish both, right? Intellect Design is an IT stock, and it is head and shoulder breakdown from the neckline has already happened, and maybe it has taken a support and seems to have breached. It will give clear possibility of downfall is there if the price moves below the previous week's candle low. You can give short swing trades because momentum, look at this, bearish. There is a divergence, there is a possibility it can climb back. The moment it climbs back the sideways zones, get out of the trade, worst case. Tight stop loss above this 500 zone. No, should not play it above the 500. If it is 500, then this pattern is negated. Otherwise, it should give good swing trades at least 300 because momentum trend both are heavily bearish on the beta. Developed healthcare is also having a downfall from the descending channel, and momentum is turned into the bearish zones on the medium term, and trend has crossed over the bearish zones on the medium term as well, and the price is slipped from the support zone, and at least 995 can easily be seen is what it looks like. Right? So bearish short call on a medium term swing trade opportunities. Another trade opportunity could be seen here in this Batman kind of strategy. So it's a 6 leg strategy where you are having broken 9 weeks on both sides, put side and call side. And so basically you would have some minimum amount of profitability in this mid region as long as it remains there. It gives a good range and it is not having any big advantage like that of the double technical spread, but it's in good range. Look at this. As long as Nifty does not fall below the 17,950, you're not going to lose much. Right? And as long as it doesn't hit the 17,600 above, that's exactly what the options open interest as of now is also showing. So that range is maintained, then we can still be come out with a small profit, right? And if it is exactly the support and resistance zones, if it moves to that exact zones, then we can make more profit as well. But that way may be reasonable, but these are trades that can be taken consistently, rather than aiming for high profits. Aim for small 1% kind of profits per week consistently, and then that's all. So it gives a safety cushion. Anyway, if you lose, you're not losing big. It's completely risk defined. So let's pay off for the Batman strategy, where you have two broken wing iron flies taken, iron broken wing, whatever I call, taken on both foot sides. Right. So basically, you are doing nothing but this is kind of 264 pattern on both sides, so put side and call side. 264 means you're selling 6 slots at this zone 18,000, and then 6 slots at this zone at 18,500 nearby, right? And then you're selling one lot, you're buying one lot here on both sides and buying another lot at the hedge portions, another 2 lots each on both sides P and as a hedge. So it's completely risk defined, and you can just come out of the trade if it breaches the break even point, or you can adjust or roll down or roll up according to which side it's moving. Yep, so that's a Nifty option strategy. And then coming to wrap up, what exactly happened last week? Nifty did a sharp fallback. Nifty also went bearish for the first time, but finally managed to close flat. But both of them have lost the momentum. Trend has crossed over now in the short term, but medium term looks intact. So 90 is not going to be easy, that easy to be taken as we thought last week, but it may take a long time. It may take some more time before consolidation. There has to be another event, another reason, another earnings season, another reason for that to move further up, right? So that's what it's doing. It's trying to not crash down and hold that levels, even when there are world other markets and global markets and other markets are all slightly bearish. So that's exactly what is happening. So it's a sideways and mild bearish and sideways kind of view is what I have for the next week. Reasons: trend momentum slipped to sideways short term, operators lowest bearishness, US indices are reversing mode, Fyers are in sell mode, price actions indicate you that. At the same time, this bullishness is also on the medium term. So it's not going to be big crashes. So in support resistance level is what you have to closely watch for. US market definitely, if it is breaking down, control position size and then play safe. There's a lot of the VIX is very low for so uncertainty is less, but that does not mean that uncertainty is not there. The market is still there. Anytime this Russian fears and repo Fed interest rate hike news is what triggered all this crash last week. Similar kind of uncertainty is still there, so that could create volatility in the market. Right? The only thing is crude oil is cool now, but rupee is a worry. So VIX can spike up from before interest rate, spike up from the 13 point some level, which is support zone previous, and then from there it is nicely spiked up now. It is going to be a big spike up. That is up to the market to decide what is the sentiment. Right now, VIX is low. You can still play with more capacity and confidently, but VIX is in the spiking up mode. So you have to be slightly cautious because the market may be correcting. So and that correction may end up in a consolidation because in between it may spike up also. So that's what it is. So 17,950 seems to support. 41,650 on Banknifty also is support. Similarly, 18,700 and 44,000 would be resistance on the upside. From there, we can expect more rally to come in. And if 950 is breached, then we have support downside, but that may mean that the correction is going to extend further. That's all in our hands. We cannot predict more than that. So protect your capital, play safe, and have risk-defined strategies like we discussed. This kind of strategy is what you take, so we'll still be in the game even if the worst happens overnight. Don't take overnight risk. Hedge your positions. Intraday you can play with tight stop losses, right? So you should be aware of the huge volatility where your stop loss get whacked, right? So you have to be careful on that. Protect your capital and play safe. Another thing is protecting your quality investments. How do you do that? You have option strategies. You can use that. The same strategy that's used for the trading on the Nifty on a week-to-week basis. It is there in the playlist of option strategies. Check out the playlist of the videos. You can find that how exactly more detailed explanation is there on that. Similarly, protection of the investing can be done with the help of getting rid of my covered calls and cash out puts and all that. So that strategies are also there. Please check out that. Right. So that's my view, mild bearish to neutral kind of combined. That's the kind of view I have for the next week. Your view can differ, but view can be based on all the same parameters that you studied. You may end up in another view. It's possible, but my conclusion on that, right, based on pluses and minuses on both sides, I feel that maybe it's somewhere in the neutral side where we have. But if the levels that I watch is breached, then definitely I change my view. So in case this chart study and this market study that we are doing for almost 30 minutes now has helped you in some way, and you're having better clarity and having a better trade plan, then anyway, if it has helped you, please consider hitting the subscribe button if you have not done so, and please share it to your friends so that we have few subscribers more. That's only motivation that we have every week in doing this, right? So appreciate your help in this regard, and thanks for watching. Happy trading, happy learning, happy investing. Bye bye.